Good afternoon, everybody. It's Hari Swaminathan. It is Saturday, September 1st, and I wanted to give a brief review of what the Trading Ideas service is going to look like as we go forward. As you know, the trial members will get an opportunity to understand how this service is going to evolve in the future. So here we are on the Trading Ideas page. On option Tiger, you can come to the main menu here with Trading Ideas, and this is where you'll come. Obviously, you know there's a dual goal in this service. One is to create profits, and the second is to learn the ins and outs of how to deal with options positions. So, in that respect, the one of the other key focus of the service is on learning the art of adjustments. Now, so far I've not sort of separated trades into the different types, but going forward from September I'm going to separate them, and it's there's going to basically be three categories of trades. One is our monthly income or the monthly cycle trade. So this could be credit spreads, long options, as well as debit spreads, and even some advanced strategies like iron condors. But basically, it will be a monthly cycle. So what we mean by that is we expect to hold it for about 2 to 4 weeks, unless, of course, we achieve our profits quicker, in which case we exit. So basically, all kinds of strategies are here, but no nakeds, no short straddles, no short strangles, none of that kind of trade. This is all fixed risk and what you call defined risk and defined reward strategies. And the whole time is generally going to be less than a month. And this will also be our default type of trade. So which means over 60%, 50 to 60% of our trades are going to fall into this category. Now, as I issue a trade alert, I'm going to specify which category of trade it is. So there's plenty of trades, and there should be something for everybody here. Now, the second category is the weekly options and earnings plays. Of course, earnings just comes about 4 times a year. So, those are very seasonal, but weekly options are obviously available all the time. However, everybody needs to realize that these are highly speculative trades, and so these require monitoring, they require very quick adjustments and very quick exits as well. So these trades are actually not for everyone, and I know one of the things that many people have taken some of these trades without probably realizing the nature of these trades. And during earnings plays, we will definitely do some short straddles and short strangles. These trades require higher margin. They have risks associated with them. So if this is not your type of trade, then I would highly recommend that you don't get into these positions at all in the first place. So basically, if you're very busy with your job, you cannot monitor or you cannot adjust your positions quickly, then this trade is not for you. Then there'll be some other trades like what we call medium term trades. So these trades are usually motivated with some kind of a fundamental story. So, either there's a turnaround or things have been oversold or overbought as compared to its, fundamentals, things like that. And so the whole time for these trades could be anywhere from 1 to 3 months. But of course, we will exit if we get our move quicker. Obviously, we'll exit. If we get a good return, we'll exit. And generally, these trades will be what I call a low risk, high reward type play. So basically, we'll start off with long options, and then we'll tweak that because if you just hold a long option, it's going to lose value on a daily basis. So we have various other strategies which we'll use to counter these effects. So if you take this kind of a trade, then bear in mind that whatever margin you allocate to this trade, could be locked up for a little bit. Basically 1 to 2 months, something like that. But of course, again, these trades are not going to be done all the time. So if you look at our trade here, EEM is definitely of this kind of a trade. So right now we have 20 long calls. Basically, the story behind this trade is yes, developing markets are getting hammered a little bit, but generally, and that's what happens whenever there's a little bit of confusion, the emerging markets go down. However, they also rebound pretty heavily. So, that's the play we are. And you can see we put 110 days here just for that reason. So, although these sort of subtle aspects of each trade may not have been made clear before, I'm going to be making these very clear. So, clearly this emerging markets, the EEM trade falls into this kind of a category. Whereas the GMCR was the number two, which is it started out as an earnings play, and now we are adjusting it. It's one of those earnings plays that did not go our way, and therefore now we are constantly trying to come back to break even on this trade. So this is the kind of trade that it may not be for you. But now going forward in September, it will be clearly marked. So this is in the category of the long-term trade, or what I call the medium-term trade. This would be in the weekly or the earnings place trade, and then we would have our regular monthly staple trades. So the other thing is, going forward, we are going to be tracking all the trades, and it'll be posted on this page. So here you can see click here to see the latest trades and performance, or you can come here and you'll see this big blue button here. You can click on that, and that will take you to the Trading Ideas performance page. Obviously, September, we've not started anything yet, but let's take a look at August and see what we have here. So August, so it'll come, a trade will come up here only after it's completed, after it's closed. So basically, these are all the trades that we closed in August. These are this was the strategy, what was the margin used in that, the profit, the return, profit, obviously profit or loss. We have one loss here, and perhaps we'll have another loss on GMCR. But GMCR, because it's not closed in August, it'll come up in September. But again, we will tell you how much we did in how many days. Now, there's a last column called videos here. So if anybody wanted to look up what the what the videos were for these trades, then they can come here. And each one of these is a hyperlink. So if you click on any one of them, it should take you to the YouTube page for that particular trade. So, so that's how this page is designed. Now, the important thing is these videos as well as these trade performance parameters will come here only after the trade is closed. Obviously, because we don't want to put this information out in the public domain before the trade is closed. So this month you've been seeing all these YouTube videos because I made everything public, but that's not going to be the case as we go into September. So from September onwards, all of these, not these past trade videos, but any trade that we are working on will be a private video. But if you're a member, you'll get a link to the video as I put it out. So that's as far as the trade idea tracking, the service tracking and the performance is concerned. Let me see if there's anything else I need to cover. Let me just pause the video and I wanted to cover briefly what we would look at in terms of a weekly option. And when I say, highly speculative, but at the same time, what we want to try to do in these weekly options sometimes is, let's look at Apple right here. It's at 487. We know over the last couple of days or 3 days, Apple's come down from 502. And in fact, even at 511, we closed our previous long call at 511, and it's come down since then. And so now going into September 10th, we can expect, and especially if there was no attack this weekend, which it looks like there's not going to be one, then we can expect Apple to go up this coming week. So perhaps what we might want to do is go to the 500 or 510 strike price, and for a very low, or even the 510, and come here and take 10 contracts of this. So if I take 10 contracts of this, I'm only going to pay $970. And if Apple makes a good $10 move, which is very possible that it might, this option is going to return. It's going to be priced at between $2 and $3. So even if it's $3, that's going to be a 200% return. So in general, we're going to look for what I call low risk and high reward in terms of the weekly strategies. Obviously, there's the flip side of that where we sell premium and we go for time decay. So both of those are going to be a part of what I call the number two, the second category, which is the weekly options and earnings plays. Now, earnings are completely different, so I'm only talking about weekly options. So the two ways to play weekly options would be one, you go on the long side, and the other one, obviously, you go on the time decay side. So, and there'll be a good mix of both of them. So clearly, I mean, because for example, this is a great example. If there's no attack this weekend, I would buy this on Tuesday morning. I would buy this 510 call on Apple, and we're going to pay a lot less. Obviously, time is against us. However, even if Apple moves about $5 to $10, this option could double in value. So, that's the kind of reward we are looking at when we go in for these kind of trades. That's one thing. Then there was questions about the number of contracts and why I trade 20 and 40 and all of that. The one of the things that I have to do also is I have to watch out for the performance of the portfolio itself, not just in terms of percentages, but also in terms of absolute value. So I do have to put some higher numbers there to show to experience the performance both in terms of percentages as well as in terms of absolute dollars. However, it's very simple. If I put 10 contracts, you can put one. If I put 40, you can put two or three, or just whatever your size is. Just keep it to that. The only thing I would suggest in terms of the number of contracts is if you just put a one contract position, then if you want to adjust that position in terms of a half size adjustment, then that won't be possible with a one contract position, because the minimum is one contract. So if we have a $10 or rather 10 contract debit spread, and we wanted to adjust it with five long calls or whatever the case might be, then that won't be possible if you do just a one contract. So in that sense, I would recommend that you do at least a two contract position. That way, if you need to go in for a smaller size or half size adjustment, you do have the one contract option to do that. And so, you're better off being a little selective with your trades. So because I'm going to be releasing between these three categories, I'm going to be releasing perhaps 15 to 20 trade ideas on a monthly basis. And there's no reason for you to get into all of them. First of all, you want to decide which category, of trade you want to be in. And obviously now going forward, I'll be, as part of the alert, I'll be specifying that. So, if it's not your type, first of all, don't get in. Then, if you don't believe in the trade rationale, don't get in. If you think you want to get in, but you're not 100% sure, you move to a safer strike price. So, you don't have to go in for the strike price that I specify. So, in terms of if we were to sell, let's say, a credit spread right here, if I were to sell 475, 470, maybe you don't want to come that close. Certainly, the trade idea or the rationale. If you believe in the rationale, then you choose your own own strike price. You can go down to the 465, 460 level. Yes, you will get little less credit or whatever the case might be, credit or debit. You might pay less, but you're playing it according to your situation, and that's important. Just don't go with with my strike prices. Certainly move it down one strike or even two strikes, but make sure that you are comfortable with the risk associated with that position. So that is an important thing, because your personal situation is always one of the most important criteria when you select an option strategy, when you select strike prices, because how much time do you have for the markets? I monitor the markets on a daily basis, but maybe you don't have the time. So if you feel that a bull put is a good trade, but I'm suggesting at 475 or 470, you can certainly move it out to 465 and 460. But it's important to tailor the trade to your situation. Because if you don't have time to monitor it, or if you don't have, the yeah, I mean, if you don't have the time, or you don't want to adjust these positions that quickly, just move the strikes over to a safer strike price, and you can still, you're still doing the same trade. It's only that you're adjusting the trade to your circumstances. So that's also an important factor. Other than that, I don't know if there's anything else that I have to say. Let me just check and I'll come right back. Yeah, so I started this point by saying, pick your trades. You don't have to get into all the 15 trades that I send out. You don't have to put your money into each one of those trades. So pick your trades, maybe four or five or six, because that's really all it takes. If you believe in a good trade, then you can increase your size a little bit. Instead of your regular two contracts, you might want to put three contracts or five contracts. But pick and choose your trades if you think it makes sense. Then that's really how you should be tackling this trade ideas service. Then I do want to mention before I forget that it is Labor Day weekend, so Monday tomorrow is a holiday. So I'm going to extend the deal until tomorrow. So if anybody is interested, you can sign up. You have all the details, but let me just show you. You can come here, come to the buy page, and this is where you're going to see the trading ideas. Just scroll down and you'll see the 99 per month, or the 995 for the annual. So I'll keep this open for Monday also, and it will close on Monday night. So basically, you have one more day to look at this. Other than that, I don't think I have anything else. I do want to mention, if if there are stocks that you think might have a good trade, or you believe that there is a certain trade rationale that I am not picking, or just because of the industry you are or the kind of stocks that you follow, certainly feel free to send me an email with your trade. And if you do send me an email, please send me a picture of this graph, because you can explain the trade by saying the strike prices and this and that and premium. All of that, really, I mean, a picture is worth 1,000 words. So just send me a copy of an image. And if you wanted to do an image, you can come here, and on the Thinkorswim platform, at least, you can see you can export or print this layout, and here you can say take picture on the Thinkorswim platform, and this will create a JPEG file, and that's really all I need to see. All I need to see is this picture with the price, the deltas, the Greeks, the margin. This tells me everything. This tells me everything. So if you send me a picture like this, I can give you an idea if it's good. If I think the idea is a very good one, I'll send it out to everybody. Otherwise, I'll definitely send you my opinion and let you know what I think. Perhaps I'll say move the strikes a little closer or a little further away, whatever the case might be. So that definitely you can send me some of your whatever you're looking at. We are constantly adding to our watch list of stocks, of interesting stocks. There are a couple of uninteresting ones which I want to take out, like Intel and things like that. These were all yesteryear's stocks. They are no longer interesting. They're very, very boring stocks now. But there are new things coming up, like Splunk. Splunk is this some big data provider. If you look at it, Splunk just came into my radar on Friday. It's made some huge moves. So this is like Tesla. When Tesla made this kind of a move about 6 months ago, Splunk is hitting the big one there. So in their space, looks like Splunk is going to be one of the early movers, and the space itself is very hot of managing big data, analyzing big data. So that's the space they are in. So we'll constantly be adding stocks to our list. We'll constantly be taking some out, but as we stand, that's this is what we have. And between these about 20-25 stocks, we have plenty of trading opportunities on a monthly basis. Some of them will present us with a 2 to 3 month opportunity. Generally, I don't want to think of opportunities that are more than that, like 6 months and 12 months, because it's just impossible to predict any kind of. Then you have to go into company fundamentals, do some value investing analysis, and all of that. So we just don't have time for all of that. We focus on the monthly trading cycle for the most part, and of course, we are going to take some speculative shorts where we have the chance to make 100% or 200% in a matter of a few days. So that's how the Trading Idea service is going to progress. As usual, if you have any questions, you can email me or you can call me on 301 760 7658. This deal is open until Monday night, and I won't be changing the prices on the site until Monday night. So if anybody wants to join in, please feel free to go to the buy page, and please sign up with the plan of your choice. I look forward to seeing you there. All right, so that's about it, folks. Have a great weekend. I'll speak to you on Tuesday morning. Thank you. Bye bye.